Welcome back. Still weak for the market, 6,020, but it's defending these lower levels. No respite yet or recovery seen in HDL. That stock is still down close to about 15 to 16 odd percent. And Vijaya Bank, which came out with its numbers, is showing you a marginal cut of about 1.5%. But time now to turn our attention to our personal finance segment. Harsh Roongta is our expert for the day. Harsh, mutual funds have begun the new year on a high note with plans to pay dividends to their investors in equity funds. So should investors increase their exposure to equity funds or start investing in equity funds because there will be increased dividends coming out from them?
Well, I think a dividend from a mutual fund is a completely different kettle of fish from a dividend in a company. In dividend in a mutual fund is your own money coming back to you. The exact amount of dividend that is declared will be reduced from the NAV. So effectively your net wealth doesn't change. Unlike a company, where when a company declares dividend, there is a certain inherent consistency that it is promising to the market, that they will be able to maintain that dividend payout ratio. That clearly is not something that's applicable to mutual funds. So I think a dividend as the reason to increase your exposure to equity funds, I don't think is the correct reason. There are, on the other hand, funds that specialize in high dividend yielding companies and which have done quite well. So you can increase exposure to those funds if you think that dividend yielding companies are a good investment and you don't want the trouble of finding them out individually and have a portfolio manager or a mutual fund manager who will invest that on your behalf.
That's fair. It's a confusion that needed to be cleared, Harsh, because there is so much of sound on dividends from these mutual funds. That is a useful clarification. Well, actually, we are in the mode of clarification today on mutual funds. So one more question. This came from a viewer, but I'm just putting it to you. Can you explain the concept of equity and derivative fund and whether this is suitable for conservative investors?
Well, a derivative fund is essentially what is colloquially referred to as an arbitrage fund. And what they essentially do is that you buy in cash. So the most simplest strategy that that kind of a fund employs is that it buys in the cash market and sells in the future market. And the difference between the two is actually in interest. Although they are buying equity and selling equity in the future, the difference is interest. So essentially, you are actually getting interest from buying and selling equity, and therefore the arbitrage funds are comparable to a liquid fund or an ultra short term fund. And if you look at the category returns there, clearly they have done slightly better than the ultra short term fund, definitely better than the liquid fund. There are certain tax advantages that the arbitrage funds has simply because the securities that they invest in are equities.
Yes.
However, I mean, one must realize that arbitrage funds might have higher exit loads as compared to a liquid fund or even as compared to an ultra short term fund. So you have to weigh the two, the tax advantages if at all you have it, vis-a-vis the extra exit load. So if your period of holding is likely to be higher and you are likely to enjoy tax advantage, then possibly an arbitrage fund is probably a better investment than an ultra short term fund.
But if I do a direct access to any of these arbitrage funds, I will be rid of the exit load?
The exit load is not connected to this direct plan issue that you are raising. That will be applicable whether you apply in the direct plan or whether you have applied through a distributor.
Fair enough. That's important clarification. Thanks a lot, Harsh, for joining us with these clarifications for mutual fund investors. We have to take a break. We are actually eagerly awaiting several things. The Vijaya Bank press conference may start any time now. As well, we could get some details. We also want to analyze some of the results that are coming in. L&T is the big one coming in, Sesa Goa. Well, all that coming up for you in a minute.